the big story of the day, was actually out on Friday late evening. It's being one of the biggest trade triggers for our markets till today. And that is the RBI circular on NPAs. Came out on June 7th, which is now the new Feb 12th. The new NPA stressed asset framework. Let me discuss this now with Alka Anbarasu, the Vice President of Financial Institutions Group at Moody's Investor Services. Alka joining us here on the phone line. Hi, Alka. Since Friday evening, we've been reaching out to a whole host of experts, bankers as well. The bankers seem to be lapping up this circular, saying it is far more pragmatic, far more realistic. Whichever way you look at it, there are lakhs and crores riding on this circular. So while the definition of default is not changing, there is a 30-day grace period which is being provided for arriving at a resolution. If I could get your initial comments on what this is going to mean for one of the biggest pain points in the Indian economy.
Yeah, sure. Hello. Yes, indeed, we followed the circular, and we think reinstating the spirit of the circular, which was the February 12th circular, which the Supreme Court struck down a few months ago. In spirit, we see that the circular has been reinstated, and which is positive because the circular still requires banks to proactively plan a resolution. There are certain tweaks to the circular, but we think that in spirit, the focus is on timely resolution of assets, and the focus is on providing for those assets and build up in loan loss provisioning against those assets so that banks can take haircut whenever the resolution takes progress.
Alka, one of the points that is being celebrated about this circular, yes, the spirit seems to be the same. It's perhaps just not as, if I could call it, as autocratic or as one-sided as it was before. It seems to be more pragmatic is the view on the street. But, I wanted to get your views on the circular being extended to NBFCs. If there is one big shadow of discomfort that is there for the banking landscape, for the markets at large, for Indian investors, foreign investors, it's to do with NBFCs. The fact that the June 7th circular is talking about NBFCs, would that not be a big positive?
Yes, so we do see that extension of the circular to NBFCs is positive. So now, when it comes to the NBFCs, let's split the situation into two aspects. So one is the ongoing liquidity issues of some of the NBFCs, which are very well known in the market, and that is a different topic where we are seeing that there is stress in the entire NBFC sector. But what this circular is addressing is that NBFCs, and particularly we are talking about large corporate assets here. So we are talking about NBFCs which are involved in infrastructure financing or large corporate financing, that those NBFCs will need to confine with the banking norms as well when it comes to providing for those assets. So earlier, if we were to see large power sector asset, banks may have provided that asset at X percentage. NBFCs were following a different norm because they didn't come under the same banking norms. And that is where perhaps when it comes to all the lenders at the same forum, different lenders had different capacity to take haircuts, and that was also an impediment to the resolution process. So we do think that extension of this circular to the NBFCs is positive because, again, the NBFCs are also a large lender to large corporates, infrastructure sector, and this will align the objectives of all the lenders bring them all on the same page as well.
So we are seeing the extension to NBFCs, but, there is also another view that you're going to see many, many more cases headed to the NCLT. The circular is also talking about a timeline. So I wanted to get your views on that. Are you also of the view that, yes, perhaps many more cases will be headed to the NCLT for resolution with the timeline that is being talked about? And how feasible is this entire process that has been laid down, the appointment of the RP, the signing of the intercreditor agreement, and that quorum of the approval of 65%?
Yeah, sure. So, with procedurally, perhaps it's not a big departure from the earlier circular. Procedurally, this circular also says that IBC may not be the route for every single asset, so bank have the flexibility of determining the resolution approach. Having said that, I think in practice we would expect that banks would go down the IBC route because it offers more transparency. Also, having that IBC stick on the head means that even for the borrowers, they know that there are certain timelines that need to be adhered to. So from that perspective, procedurally, we don't see that as a big departure. Perhaps the semantics have changed. Having said that, I think our big concern with, perhaps not a concern, but our big issue with the whole process so far is that IBC, whether it was under the old circular or under the new circular, the progress is slower than what we have anticipated so far, and which means that we have not seen the cleanup in the bank's balance sheet take place as we were anticipating. And whether it's under this circular or even banks have their own discretion to go out and file cases with the IBC, but there are still a number of legal loopholes, and there are a number of legal issues cropping up, and which has delayed essentially the resolution process. And while there are some assets which are attractive and perhaps we need to find the optimum resolution, having said that, this whole delay or the slow process under IBC could mean that some of these assets may even lose value eventually if a resolution is not found in a timely manner. And that's our big concern, because while everybody in the system, whether it's the banks or the whole process around it, RBI, everybody is focused on ensuring that the assets get resolved, but the outcome has been extremely slow.
Alka, before I let you go as well, so, from what you're telling me, net Moody's view seems to be this is credit positive, but you still are concerned about the timeline, which, has perhaps not always been strictly followed with the insolvency bankruptcy code, but that, to be fair, is a new law, and every case is turning out to be, in that sense, an asset test. Something else I want to get your view on, once again, about this approval matter. In spirit, it seems as if the Joint Lender Forum is back, but it has been tweaked where it is carrying along everyone. Therefore, the operational creditors of the small banks need to be carried along. That being mentioned in the circular, are you seeing as a positive? Because, for the first time, that is being talked about. And, to be fair, why should a smaller bank feel that it is being losing out just because its exposure is smaller?
No, that's true. I mean, I think the circular maintains the spirit in terms of, say, 75% of the lenders aggregating by value need to agree on the resolution, or 60% by number on table. So there are those. Perhaps the circular has tried to address some of the issues that had cropped up so far in the process. So bringing in operational creditors as well, because we know that operational creditors have been one of the limiting factor for the resolution of one of the very large steel sector asset in the system. So from that perspective, the circular seems to be addressing those aspects that have delayed the resolution of some of the larger known assets. Having said that, obviously with the circular, if the circular were to be expanded to say that everybody on the table needs to agree to the outcome, then it can get very, very, very difficult to come to a resolution as well. So from that perspective, we do see the circular is trying to balance out different stakeholders in the process, but perhaps our main concern is we need to see the outcome come out, and that's perhaps also in the interest of all lenders to go out, resolve the asset, perhaps take haircuts, and then move on to something else. But right now, we do see that the banks are just saddled with those legacy NPLs, which are very, very slowly moving out of the balance sheets.
Okay, Alka, we're going to leave it at that. Thanks so much for being so candid and getting us the Moody's view on this very crucial circular. Feb 12 has been replaced by the June 7, 2019 circular, rewriting the rules as far as dealing with stressed accounts goes.